Cryptocurrency has captured global attention, promising a new era of financial freedom. But is it a revolutionary opportunity or just another speculative craze? Let's break down the essentials to help you decide if crypto deserves a place in your portfolio. What is cryptocurrency? Cryptocurrency is digital money secured by cryptography, running on decentralized networks called blockchains. Unlike traditional currencies, it's not controlled by banks or governments. Bitcoin, the first cryptocurrency, launched in 2009, and since then, thousands of cryptos like Ethereum, Ripple, and Solana have emerged, each offering unique applications beyond just money transfers. Why consider investing? Potential for high returns. Cryptocurrencies like Bitcoin and Ethereum have delivered staggering returns over the years. While past performance isn't a guarantee, the market's potential for rapid growth is undeniable. Decentralization and control. Crypto allows you to manage your funds directly without intermediaries. For many, this is a step toward financial independence. Portfolio diversification. Adding crypto to your investments can help balance your portfolio, since it doesn't correlate directly with traditional markets like stocks or bonds. The crypto market operates 24/7, making it accessible to anyone with an internet connection, regardless of location. Hedge against inflation. With a capped supply, Bitcoin and some other cryptos are seen as digital alternatives to gold, protecting against the erosion of fiat currency value. The risks involved. Crypto prices are highly unpredictable. A single tweet or regulatory announcement can cause massive price swings, making it risky for conservative investors. Regulatory uncertainty. Governments are still figuring out how to regulate crypto, which could lead to restrictions or bans in some regions. Security concerns. Crypto wallets and exchanges are frequent targets for hackers. If you lose access to your private keys, your investment could be gone forever. Market speculation. Many cryptos gain value based on hype rather than utility. This creates bubbles that can burst, wiping out investments. Environmental impact. Mining cryptocurrencies like Bitcoin requires significant energy, raising concerns about sustainability. Getting started safely. Research thoroughly. Understand the technology, the coins you're considering, and their use cases. Avoid jumping on trends without due diligence. Start small. Invest only what you can afford to lose. A common recommendation is to allocate no more than 5% of your portfolio to crypto. Diversify. Avoid putting all your money into one coin. Spread your investments across established and emerging cryptocurrencies. Secure your assets. Use trusted exchanges and store your funds in hardware wallets for added security. Stay informed. The crypto landscape changes rapidly. Keep up with news and regulatory updates to make informed decisions. Cryptocurrency offers exciting opportunities but comes with significant risks. If you're open to high-risk, high-reward investments and willing to educate yourself, crypto could be worth exploring. For those prioritizing stability and lower risk, traditional investments may be a better fit. Always invest wisely and never gamble more than you can afford to lose.